I am pretty sure that most of you have heard about Facebook. But you might not have the time to go through their financials. So, I went through their annual reports and graphed some charts for you. Before taking a look, I laid out a visual representation of their business. Facebook houses different products under their umbrella. And I am certain you have heard of nearly all of them. Facebook, Instagram, Messenger, WhatsApp and Oculus. And their business model is pretty simple. They derive the majority of their revenues, more than 98%, from selling advertising placements to marketers. Put simply, marketers can buy ads that appear on the Facebook network of apps and third-party applications as well. Their other income stream consists of revenue from consumer hardware devices and fees from developers. Facebook has taken an interest in initiatives such as augmented reality, artificial intelligence and cryptocurrency. But it has yet to impact the profit and loss significantly in the short term. Let's take a look at their user metrics for a moment. The number of daily active users grew by more than 60% since 2015. And most of the growth came from Asia-Pacific and rest of the world. But since not everyone logs on Facebook every day, let's look at monthly active users. At the end of 2019, there were 2.5 billion monthly active users, which is quite impressive. Now, let's look at the monthly metrics relative to the daily ones. Around 3/4 of monthly users in the US and Canada are daily users. This compares to the 60 to 65% figure of other geographies. I guess that people in the North America are more glued to Facebook than the rest of the world. Now, those metrics do not include users across Instagram, WhatsApp or other products. Facebook recently devised a new metric to capture users across all their platforms, called Daily Active People and Monthly Active People. There are nearly 3 billion monthly active people across all of Facebook's products, around which 78% of them use the apps daily. These are amazing numbers. To put it in context, the world population aged between 14 and 64 years old is around 5 billion. And for those of you who will say that fake accounts are included in Facebook's metrics, note that less than 4% of them are fake and the majority of them has been removed. Looking at the average revenue per user, we can observe how the US and Canada command a higher figure than anywhere in the world. It is around 3 times more than in Europe and 16 times more than in the rest of the world. Now, multiplying the revenue per user by the number of active users gives us the total revenue. Can you believe that Facebook's revenue was not even 20 billion in 2015? It has since more than tripled. This is thanks to the growth in revenue per user as well as acquisition of new users across the globe. The revenue split by geography is rather stable. We can expect the US and Canada proportion to continue to decline slowly in the near future. Gross margin is obviously high, sitting at around 80%, since the business model is highly scalable. But notice how the margin has been declining since 2017. Facebook is obviously investing more in data centers, but it is also suffering from higher traffic acquisition costs. Their research and development spending rose by more than twice since 2015, but declined as a percentage of revenues due to operational efficiencies and process automation. Facebook has been investing more in marketing and sales as well. The firm has to fight for user time from competitors like Snapchat and LinkedIn. Facebook kept its general and admin cost in check until 2019. Then the whole FTC inquiry happened and Facebook was required to pay a $5 billion penalty. Now, the bottom line, which is net income, has been growing over the years, except of course in 2019 because of the penalty fee. Let's turn to their cash flow now. Facebook is a cash-generating machine. Look at the increase in cash from operations. It has grown to other $36 billion, despite taking the $5 billion hit in 2019. Cash from investing activities contain mostly the purchase of property and equipment as they invest in data centers, servers, network infrastructure and marketable securities. As for cash from financing, Facebook has been buying back some shares. They even added another $9 billion on their share repurchase program at the end of 2019. Like our video on Tesla, we will now look at free cash flow, which we get from deducting capital expenditures from the operating cash flow. Unlike Tesla, Facebook is free cash flow positive, with over $20 billion in 2019. As a reminder, positive free cash flow means the company has enough cash on hand to even repay creditors and issue dividends to shareholders. It is to note that Facebook has no real debt on their balance sheet. The closest item to debt is their operating leases. And just like Apple, Facebook loves to reinvest cash in marketable securities. They have around $55 billion in cash and marketable securities, about a quarter of what Apple has. Facebook's stock price is up over 500% since its IPO. It's not as much as Tesla, but it is still impressive. Recently, big brands like Unilever, Ford and Microsoft are boycotting Facebook for their mishandling of misinformation. But rest assured that Facebook's top 100 advertisers constitute around only 5% of Facebook's revenues. It is going to take more than that, or even a wrist slap from the FTC to take down the firm. I hope you enjoyed this episode and learned something new. Don't hesitate to tell us what you think about Facebook's financials. Do you think they still have room to grow? What should they do to maintain their edge? Let us know.